3, 2, 1. 3, 2, 1. 3, 2, 1. 3, 2, 1. Risk to reward. I know you've heard that. You've heard it shouted from the hilltops, the mountaintops. All the Discord sellers, the course sellers, all these expert day traders telling you that you need to trade with a 3-to-1 risk to reward, that you need to have a 10-to-1, a 5-to-1. You got to have more profit than your losses, right? You got to pay $5,000 to find out about this magical 3-2-1 risk to reward. Well, what if I told you it's all a bunch of bullshit? What if I told you that 95, maybe 90% of day traders lose because they're all trying to do the same exact thing? Everybody's trying to trade this magical 3-to-1 risk to reward. I see it all the time. Traders are like, man, I got into the trade. I was up a few $100, and then I got stopped out. I just wanted that 3-to-1, man. I wanted 3-to-1. Why did I not get my 3-to-1? Well, the market ain't always going to give you what you want, first off. And then you got to ask yourself, if all these traders, right, all these traders out there and all these gurus and all these discords are all trading with the same idea, why do more people not make more money? Why do they not make more money? That's English for make more money. Why don't you make more money? Well, if you want to do something, right? If you want to become successful in anything in life, and you see that there's a large majority of people that lose money doing something a certain way, would that not be like a kind of a red flag? If you're not like, oh, it's weird. It's weird how all of these people all trade with this amazing 3-to-1 risk reward, but they're still not profitable. Who's lying to who? Well, what if I told you that I do not focus on 3-to-1, 2-to-1, 5-to-1, 10-to-1? I don't give a fuck. Honestly, I don't. I think about simple as this, right? I want to get into a trade. I want to take profit. And then if I get into a losing trade, I want to cut it off for a loser. I trade very much with a 1-to-1 risk to reward. Sometimes maybe even a little bit more skewed to like a 0.8-to-1 or a 0.5-to-1. And you're going to be like, well, that don't make no sense because my guru, I paid him $10,000 and he told me that I got to have that 3-to-1 risk reward, Patrick. Who's lying to who? The guy that sold me a course for $8,000 or the guy who's making a free video on YouTube? Who is lying to who? Well, ask your guru to do this one simple thing. Pull up his charts, right? Pull up his performance. You can see here for the month of July, trading this funded account. We got 3 of these accounts, by the way. You can see my profits, where we're at, what's going on, how's it looking, right? We got 77.99% profitability. Now, again, the win-loss ratio, it don't really mean shit at the end of the day. That number will get kind of more skewed towards probably like 70 to 60%, after like a 6-month period. But for 1 month, it's kind of where I'm at right now, 77%. But like I said, it gets to a point where it's probably going to be more like 65, 60% if on like the entire, kind of year. But again, a 50-50 or a 51% win-loss ratio is still profitable with a 1-to-1 risk to reward. Crazy, right? So the whole thing here is I think people get really caught up in hyper-focusing on like, I have to make 3-to-1. I have to do this. The market has, like everybody gets so hyper-focused on something happening when, remember, the market is just like this random thing. It goes up, it goes down, it goes sideways, it chops, it stops you out. It's not this mathematical equation where every trade that you enter is going to present a 3-to-1 risk to reward. Majority of the time, the market's going to chop. Majority of the time, the market's not going to go anywhere. So having these unrealistic beliefs that you're going to need, or you're going to have, all these setups where you get your 3-to-1 risk to reward, like having that belief will end up really kind of playing against you in the long run, I believe. I believe. You believe, I believe. So this week so far, last week, we made $5,000 Did not trade on Monday. We're back here, the BDH this week. So you can see kind of my results so far here. I'll show you my dashboard in a minute, but let's talk about the theory here, right? This theory of one-to-one risk reward and, how I play into that, what I look for and things like that. So first off, really quickly, we got the 15-minute range here, this indicator. We got the dotted line being, yes, the previous day close. We got a pivot point. We got 2 EMAs. We got the VWAP on there. I got all my settings in a video that I made recently if you want to check that out. If not, don't ask the question down below. What indicator is that? Because you can see them all right there. The EMA, the 9, the 21, the pivots, the opening range. So as a trader, what's my goal, right? My goal is to put a trade on, make money, lock it in, walk away, be done. Now, not every trade, again, is going to have a 3-to-1 risk reward. But there will be times where I enter a trade and maybe that possible 1-to-1 risk reward then turns into a 3-to-1 risk reward. I know, it's crazy. Like, wait, what? How does that work? How does that work? How do you make a 1-to-1 turn to a 3-to-1? Well, I'll show you. So you can see here on Friday, we had this move up into the opening range. Well, that was the opening range high. We set it. We pulled all the way down here. We had that low, and then we pushed back up. Obviously, the market moves in what? It moves in waves. So you can see kind of like the wave market. It's doing a wave, right? Whatever. All right. We had our entry. This was our entry. Little bull flag kind of breakout. Pulling back there. We had the pivot point. We had the EMA that I was watching. I wanted to see an EMA touch. Kind of took out that low of that previous candle. We break out to the upside. Bang, bang, bang. Making the move higher. So we're entering in this trade here at this, let's say, above the high of this previous candle being 73. So we're entering 73s here, and we're kind of targeting that overnight high. Overnight high at this point, it was 430 area. Now, I know you're going to be like, but you didn't target overnight. I know. That's 50 points. So that's about a 5-to-1 risk reward. So realistically for me, most of the time I'm targeting that 1-to-1. I'll take 10 points. I'll take 20 points and then be very, very happy. Now, you might say, well, don't you minimize your chance of making more money? Yes, but I also am minimizing the chance that I get stopped out, the market pulls back, or that I don't lock in profits. So we're long from the 70s. It pushes up there through the 80s. That's 10 points. Bang. Well, it goes a little higher. Let's say you stayed in that trade the whole way. This 1-to-1 risk to reward trade goes from being a 1-to-1 from the 72s to now a 2-to-1 and then a 3-to-1 if you were targeting the 50% of that opening range. So the middle of the opening range, that's 50% of the range. Well, then another 50% from that puts us right there to that high. Now, I did trade this in my personal account as well, taking this trade down here. I think my entry was like 43. We'll say 43s here. Basically, what I'm looking at here, it was 43. So this is my entry in this level here. We had a low. We had this low. We take it out. Kind of a double bottom. Bing, 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 bing. We push back up. At this point, I'm thinking like, okay, this is what I'm thinking, right? I'm trying to give you the idea of what I'm thinking here. 1-to-1. What can I be looking for here? If I'm entering at the 43s or the 40s, I got a pretty good opportunity here, or pretty good risk reward, because now I've got this kind of like protected low, if that makes sense, right? We kind of hit that low, we bounced, we're holding, bottom of the 15-minute range. There's a high potential. Let's say, I don't know, 70% potential at this point, 70%. That this area holds and we push up to at least kind of that opening range high. So let's say if we are long from the 43s, what is our target there? Well, 3-to-1. 3-to-1. But again, I don't go into these trades with the idea that I have to make 3-to-1. If I get 3-to-1, I'm a happy, happy boy. If I get 1-to-1, I'm also happy because, well, it works, right? I made money. Now, again, the thought process. I can be long for this breakout here from the 43s, this kind of area here. I can be long for that with my stop right here because, again, I got a great overall risk reward. My downside is basically, we'll say, 15 points. My upside is 15 points. Easily 15 points to the upside there. I see it like, okay, should not be out of the norm, right? It shouldn't be like a crazy idea that we could at least get back to the 60s. If we go up there to the 80s, well, just even better. And then I had some runners left all the way for the 420 push. So that gives us a push all the way up there for 75. So that's 7-1. See what I'm doing there, people? See how it works? I'm basically going in to the trade with the theory or the idea that I'm like, hey, I want to risk 1-to-1, but if I get more than 1-to-1, I'm happy with that, right? If every trade that you're going into, the only thing you're thinking about is how much money you're going to make, and you're just like, oh man, look at this. What if I just get long here and then I never sell? What if I never sell? I can't lose. Well, that's probably a bad, like, overall kind of thought process because, again, what are you doing, right? You're creating like this unrealistic expectation to get this magical 3, 2, 1. Everybody wants it. Everyone dreams of it. Everyone talks about it. But, again, the majority of traders do not get it. The majority of traders end up losing. So if the majority of somebody is doing something, if the majority of traders are losing money trying to get this 3-to-1 magical number, right? If this is like the holy grail of trading and everybody wants to get rich off the 3-to-1 strategy, well, then let's try to not do that. I know. So you're telling me, Patrick, don't do what everyone else is doing? You're telling me that might be a good idea to not do what everybody else is doing? Because, again, 90% of traders are losing. 90% of traders don't make money. But, again, 90% of traders on the internet will tell you that, 3-to-1 risk reward is the holy grail, right? Everybody needs to make 3-to-1. Well, how do I got to get that 3-to-1, Patrick? Got to show me. Again, I don't think it is. I don't think it is the holy grail. I think it's more detrimental than anything. I think it is holding traders back because, again, they're becoming hyper-focused on this 3-to-1 holy grail trade. Whereas going into the trade with a very smooth brain, so I don't know if that's a good way to put it, but a very kind of simple idea of having a 3-to-1 risk reward or 1-to-1 risk reward, it makes it much easier. Did I say that right? 1-to-1, something like that. If you see here on my chart again, right? This is for the month. Let's look at the month of July. The train going by. I don't know if you can hear it right now, but the train it's shaking the building right now. It's shaking. If we look, my largest winning trade, 920. My largest losing trade, 855. It's 1-to-1, baby. It's 1-to-1. But again, my percentage win-loss ratio is 77, almost 78%. So 78% of the time, I'm going to get my 1-to-1 risk reward, maybe a little bit more, right? I'm going to get that pretty often. You can see my overall kind of trajectory in this account as well. These are all, real stats there. And I can show you in the actual dashboard on Funding Ticks. They got a new dashboard coming out really soon. But look at this, right? Oh, check this out. Check that out, right? Check that out. What's that all about? Green, 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 green. That's 1-to-1, baby. That's not swinging for the fences. That's not trying to get my, $1 million or any of that crap. It's me just locking in and getting my consistent profits daily. Green, 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 green. We got 4 more days left in July. Will my 1-to-1 risk reward get us all the way to the finish line? Green here. I think so. You can see some of my other stats as well. Like I said, Funding Ticks got a new platform or a new dashboard coming out. They got a bunch of new stuff. They got rid of the news rule. They've got some other stuff going on. Well, there's a news rule. I think it's 1 minute before, 1 minute after for the Pro Plus. But for the 0, the straight to fund accounts, there is no news rule. but just kind of showing you guys my overall trajectory here of trading one-to-one. One-to-one, baby. Overall trajectory. We got over we got $5,000 in payouts from ×3, so $15,000 in payouts. You can see my consistency score, my trading days, and all of that fun stuff. My biggest win, 920. My biggest loss, 855. So again, going back to the theory here, I'm totally fine with taking that one-to-one, right? Because that one-to-one is going to happen a lot more often than the 3-to-1. Let's just say, let's just kind of let's look at some trades here and see how often, or at least look at Friday and be like, how many times could we have locked in a one-to-one risk to reward on, let's say, I don't know, a bull flag type of setup here. Let's just go to the 1 minute chart. All right. So we looking. Okay, we took this trade right here, live on YouTube. Let's say you took this short right here. Just throwing some possibilities out there of things that might have happened. Obviously, not saying that all these trades would have worked out perfectly, but let's just think. One-to-one risk reward. So the high of that candle pretty much would have to be your stop. You're risking 10 points to make 10 points here. Let's see. There's 10 points. There's 20 points. There's 30 points. So that's 3-to-1, 30 points. Bang, bang, bang. Right there, no problem. All right. The next trade from, let's say, this breakout, or you could have been long here, either way. Let's say you take this breakout from the 70s. You get your first move. Your stop loss is 64. Your entry is 74, 73 area. 10 points off the EMA. There you go. That's 2. That is 2 trades getting a minimum of 1-to-1. All right. Chop. Let's say you took this little bull flag right here. Take a little bull flag right here. Again, 402s, 415s. If you were long for 402, your stops kind of like could be like right there, 395, honestly. So again, 1-to-1 printing. 1-to-1 is printing. Right? We're seeing these 1-to-1 trades. That's now, I mean, again, you had 3-to-1 there. You got some more potential there. I mean, that would have been what if you got it all the way to the top, 30-6, so 3-to-1. So we've had plenty of 1-to-1s. We've got a couple of 3-to-1s now. Let's kind of just chopping. And then you got another little breakout trade here type setup. You're long from the 404s, right? And your risk is, let's say, 394s. This might not be a good example because all these trades went 3-to-1. No. All right, so this trade right here went basically 1-to-1 up there to the 11. So you got your 10 points. If you would have moved your stop to break even, you probably would have got stopped out. It did end up going about 2-to-1, 2.5-to-1. So that's kind of an example, right? This right here would have been your 1-to-1 risk to reward, and you would have made money on that trade pushing back up. Not bad. Fine with that. So it pulls back here, kind of get that little bottom setup. Let's say you didn't take that trade right there, but then you waited for this type of setup here for another bull flag breakout. This is probably going to be a 3-to-1. So let's say you're long from the 24s. Remember, we're basically trying to get long once we start to get that push back above those previous candle highs. These types of setup, you got like a little bottom, little breakout. So from the 24s, you're risking off the 14s, another 10 points. And there's 10 points to the upside. If you keep it going, you could go all the way up there, get an easy 2-to-1, and then pulls back, get that 1-to-1 maybe. Again, I love the idea of, like, if I'm up big on a trade, at least moving my stop to the point where I'm going to lock in, half of the profit. If I'm up 2-to-1, then I'm moving my stop up to 1-to-1, or basically 10 points, whatever, however you want to look at it. Move my stop up to make sure that I at least lock in 10 points. So Friday was actually a lot more chop and craziness than maybe not chop, but kind of like upward bullish grindy chop Another little breakout here off the EMAs from the 40s up there to the 73s. The chance that you would have gotten that move all the way to the top, probably pretty low. But, again, what is the moral of the story? I think the moral of the story here is trade the bull flags because get that 3-to-1. But I'm not going into any trade with this whole, like, theory that I have to hit any type of hypothetical targets, right? I don't want to put this, like, this blanket rule onto all of my trades where every single trade that I take, I have to get 3-to-1. Because that's going to, number one, it's going to create FOMO. It's going to create this, like, issue where if I don't get 3-to-1, then I don't feel like like I'm smart, like I'm, like, not good. So I think it's much more realistic to trade with a 1-to-1, get that 10 points, be happy with it, look for the next setup, get another 10 points, be happy with it, get another setup, get 10 points. Whereas if I get into a trade and I push up, it gets stopped out, and then I get FOMO, and then maybe I try to revenge trade or revenge trade. If I do that, then I think it puts me on tilt. So for me personally, I like the idea of just getting that 1-to-1 because that way it's like, hey, I get in, I lock it in, I look for the next setup, I'm patient, I'm waiting, I'm watching, and that's it, man. That's the whole secret here, I guess. I don't really have any more secrets other than that. I think if you really look at the grand scheme of things, if 90% of day traders lose, what are they doing wrong? What are they doing different? Or what are they doing that you could do differently? I think a lot of traders are looking for that holy grail of 3-to-1, 3-to-1, 3-to-1. And some days it works. When the market's trending, it works. And then other days when the market's not trending and, it's working against you, well, then it's not a good idea. So I like to aim small and then miss small. Whereas if I'm aiming for a real big trade, I'm probably going to end up missing big. So aim small. If you get that perfect shot, you make a little bit more money. Well, you can't be mad about that. But going into every trade with an unrealistic profit target is only going to play against you emotionally and probably play against your P&L as well. So 1-to-1, 2-to-1, 3-to-1, 5-to-1, who knows? Just trade what's in front of you, trade the charts, lock in the profit. Small profits do add up. If you guys haven't already hit that like button, if you haven't hit the like button, the subscribe button, go ahead and do it. I'll see you guys live right here on YouTube this week. Peace to the Middle East.